1971, having much to do with the overspending in general, but also because of the Vietnam War, the dollar was massively inflated, and for fear of losing all their gold to countries like France, who were requesting gold for their devalued dollars, President Nixon made a decision that set the dollar on the road to destruction. On August 15, 1971, President Nixon closed the gold window and the US dollar became a fiat currency, meaning it had no backing other than full faith and credit of the US government. The general public was largely unaware of this monumental event and actual default of the USA. This ended the Bretton Woods Agreement. The entire world was now on worthless paper, and the Federal Reserve, with the help of the Treasury, was free to steal from their citizens through a hidden tax called inflation. 1972 through 1973 was a period in time when the value of the US dollar was in question. Instead of worrying about the worth of the dollar in tangible terms, they simply settled on a substitute for value, that being demand. It was at this point in time that a flood of dollars coming home causing incredible inflation was averted and pushed forward to some future date. 1974 started the creation of demand after total value had been lost in the US dollar. OPEC announced plans to accept a basket of currencies for oil instead of the dollar. The US sent their Treasury Secretary at the time, William Simon, to Saudi Arabia to convince them to keep the dollar as the preferred medium of exchange. Between 1974 and 1978, the formation of the petrodollar was underway. Inflation in the US was raging as the Fed watered down the dollar as a result of not having a gold backing. OPEC was accepting dollars, but upset they were using a currency that was continually being devalued. They again petitioned to trade oil in other currencies, like perhaps the yen, which was appreciating in value. 1978, the Saudis strike a final deal with the U.S. that guarantees sales of oils for dollars in exchange for two things: higher rating at the IMF, which they eventually went from 38th to 8th in ranking, and number two demand was the US dollar would start to increase in value. 1981, interest rates were taken all the way up to 20% under Reagan and Volcker, and deflation set in. The dollar had a rapid rise for the following 5 years. Between 1982 and 2000, not a single OPEC nation threatened the status of the US dollar as a world reserve until Saddam Hussein said that he wanted to sell oil for euros in the year 2000. Early 2008, Iran announced it had stopped selling oil for dollars, but exempted India, Japan, and China due to their large US dollar reserves. September 2008, the two largest economies in South America, Argentina and Brazil, dropped the dollar for bilateral trade. October 2009, Turkey dropped the US dollar for trade with China and Iran. September 2010, Mexico enacted a very restrictive law that restricted the use of US dollars for almost all purchases inside Mexico. November 2010, China and Russia abandoned the dollar for bilateral trade. First half of 2011, we learned that Gaddafi and Libya wanted to trade oil for gold, dropping the US dollar. December 2011, Japan and China, the second and third largest economies in the world, agreed to stop trading with each other using the US dollar. January 7, 2012, Iran announced it would no longer accept the US dollar as payment for its oil shipments to India, Japan, and China. In addition, no US dollar in bilateral trade with Russia. January 24, 2012, India starts paying Iran in gold for the 1 million barrels per day they receive. China is expected to follow suit. March 26, 2012. South Africa will this week take some initial steps to unseat the US dollar as the preferred worldwide currency for trade and investment in emerging economies. Every day we get closer to the demise of the dollar, and people who are awake and aware of this incredible threat that we all face are preparing by transferring their fiat dollars into gold and silver, real money for thousands of years that has proven to be the best form of wealth preservation over time.